All right, everybody. It is Sunday. So, if I can get my dogs to stop interrupting me, I'll actually be able to make an entire video and show you how I figure out where price is going. Because if you watch Ali Khan's 2024 mentorship, he shows you pretty much everything except what sections of the market maker models to measure. So, let's take a look. I'm interested in the euro here. All right. Because over the last couple of years, the euro has just gotten pounded. Right. So we hit this level down here, and I didn't even go back to figure out where that was or if we've ever even been that low before. Okay. That looks like a double bottom from 2001, 20 some odd years ago. I am not looking to go break a double bottom from 20 years ago. We hit that level, we displaced up, we ranged, and now we've displaced down. I am looking at this as a manipulation out of this range. Okay. Now, if that's the case, we can actually measure that. Okay. And just take a look and see where that puts us. Okay. So if we measure from the top of that range to the manipulation move, 2 standard deviations puts us up in this area here, which is a pretty good area with these relative equal highs here, a swing high here, and a fair value gaps up here to rebalance. Okay, this is a daily chart. There's going to be a shit ton of movement between here and there, but if this turns out to be manipulation of this range and we break higher, okay, than this range, this is where I'm looking for the long term to end up, is at the 2 standard deviation. Right. So we are a long way from that. So let's get back to more current price action. We know on the daily that we just took off out of this range with a breakaway gap. Okay. And then we took the top of the entire range with another gap. So if we look at the manipulation move that created the displacement, and we find our initial dealing range, okay, and the dealing range is just a swipe of a swing high and a swipe of a swing low. So we have to take a swing high and we have to take a swing low. We did that right here, okay, and then price displaces up. So first thing I want to mark up, well, before we even mark it, let's measure, okay? So we're going to take our deviation tool again, and we're going to go from the high to the low. Now, 2 standard deviations is where we just stopped, and we're starting to consolidate. Okay, but I would not see this as being the end. One, we just touched this fair value gap. We haven't rebalanced. 2, for a market maker model, you need at least 2 consolidations and 2 distribution areas for it to be a market maker model. Well, you can count the initial consolidation as one of those. This would be the second one. And the next push will put us at either 3 or 4 deviations, I do believe. Okay. 3 deviations is rebalancing this fair value gap, taking this swing high into this fair value gap right here. Nope, I take that back. 3 is pretty much right here. So we could break above 3 standard deviations a little and then roll over. We do have an order block here. Okay. So this order block could be what reverses us instead of the fair value gap. We leave that. We leave all these other fair value gaps. And the order block is what stops us. It's possible. Okay. So we're going to keep that in mind. And we're also going to keep the fair value gap in mind. Or what's left of it. Okay. Fair value gap, extend right, and there you have it. Okay. Now, looking a little higher, and typically 2 to 3 deviations is what you're going to get off of a move like that. But we do have 4 standard deviations right in the middle of this fair value gap. Okay, and this is a daily, but this is a 4-hour fair value gap. All my fair value gaps that are showing on the chart are 4 hours. Okay, so we do have this up here as well. And if we look at that fair value gap, we have an order tank. We have an order block right here whose midline lines up with the midline of that fair value gap at the 4 standard deviations. I like this area. Okay, a lot. I would guess that it would go here before it goes anywhere else. This fair value gap and this order block, although they basically touch or overlap, which is a unicorn, I really, really, really prefer to see a fair value gap inside of an order block, which is what we have up here. I think this is stronger than this. Okay. Now, are we going to get a reaction from 3 deviation? You bet your ass we will. All right. No mistake about it. We will. But I don't think that's going to be the end of it. Because this is just our first leg of distribution. I would expect consolidation, distribution, pullback, consolidation, distribution into terminus. Okay. A lot of that's going to depend on what the model looks like. So let's take our 4 deviations and let's put our dealing range up on that and see what we have. Okay. Which would be our quads. So we'll place that from the bottom to 4 standard deviations, basically right at the midline is what I'm looking at. Now I want to take my deviation tool. Okay. And where does that put us? At 12,380. Okay. So if we were going to rebalance that fair value gap, because I want to calibrate this to a 500 number. Okay. The 500 number puts us above the midline, not quite at a rebalance. Okay. Um, so let's just kind of watch that and see where it goes. Okay. Um, so if we pulled it back down to the midline, okay. Um, I like it. I want to see where it goes. Okay. So we can see I've also marked the deviation of this here. Okay. This moved down. And deviations. Those are deviations. So I'm going to take, right, no, that's not deviation. Never mind. I'm going to take that off and I'm going to put up my quads for this full range. We don't quite line up here. So let me calibrate this to the downside. Right there. Still not quite. Still not quite. Okay. But I'm just going to say that's where it's going to go. You can see on the move down, we had really good, we had our fair value gap here at the first quadrant. We had our measuring gap at the second quadrant. We had our terminus gap here, and we terminated down here before starting our move up. Okay. But this was all ranging until we got the displacement. All right. So that's the dealing range we measured to go up. And shit. All right. So we had all of the gaps at the areas we needed to have them for this to be a completed sell side sell side of the market maker model. So now we have to go back up. Well, you can see on the way back up at the sell side's 50%, we had another gap formed to the upside, which now inverts that gap there. What I'm trying to get at is the fact that we are not done yet moving to the upside. Okay. All right. And at the 25, we had our change in state of delivery gap. This could also be the breakaway gap, but it hadn't actually broken range yet. I would consider this our breakaway gap. Okay. Um, and if we take the sell sides quads and we just make them a different color so we know where those are. Okay. Um, you know, here's our terminus gap, and here is our change in state of delivery and our breakaway gap. So we can also mark this inversion okay. Um, all right. So all of this is on the daily, right? Well, I don't want to see this on lower time frames. Um, but marking it all out and seeing, what's going on here is a good thing to do. So I'm going to take the gaps off. I'm going to leave both dealing range levels up, okay? Because I do want to see those on the lower time frames. All right. Um, and it doesn't look like we're actually going to have a gap at the 50%. We had one going to it, but then we started consolidating, which is completely understandable. If we move to the 4-hour, we do have a gap at the 50% on the way back up. Okay. So if we take our breakaway gap, which is the gap that was made breaking out of the range, which is this range, that would be this gap right here. So if I take my deviation tool and I measure from the bottom of the measuring gap, which is made at the 50% level, and down to the bottom of the breakaway gap, what I'm looking for is one standard deviation. Okay. And that puts me up here. I believe that's it. Let me just check. See which one. Yep, there it is. Okay. So let's measure from the top of the measuring gap to the top of the breakaway. And where does that give us? One standard deviation. Right here, which is where I'm looking for it to go. Okay? Which is also our fair value gap inside the order block. So we can break the one deviation, but I would be willing to bet that we probably, on the 4-hour chart, that our candle closes are below or at the one standard deviation here. And this is where I'm looking for price to reverse. Okay. Because so far, right? So far, let me pull that and get that off the charts, because that's just to double check and see if I was correct in marking my first, you know, my marking my terminus for the buy side, which I think is up here, which is at 4 standard deviations from the manipulation on the daily chart. Okay. So right now I'm looking pretty good. I think, you know, I'm doing pretty good. We're getting all the gaps in all the right places on the way up. Okay. And everything's looking good. We have obstacles in the way, but that's okay, because price just isn't going to go straight up. It's going to move from discount to premium above the 50%. It's going to break back down into discount, right? And then it's going to head back up into premium to fall and go up and down and 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 up. So yeah, I'm really interested in watching this. I don't think we're done yet. Now, if I were to pull a 7-2, we're looking at coming all the way back down to the initial consolidation before moving back up. We'll just have to see how price reacts at these 4-hour fair value gaps. Okay. But so far, we're looking pretty good on the 15 minutes. Okay. Now, on the 15 minute, we've had a change in, we've had a market structure shift. Okay. And we have had a new dealing range put in. So where would I be looking to go if that's the case? Well, here's a swing high. We took that swing high, and then we took this swing low. So this would be our new dealing range, initial dealing range. So let's give it a look. If we are going to pull back from here and start the sell side of a 15 minute, where would I be looking for it to go? Oh, let's try that again. From the bottom to the top. Well, I'd be looking for 1 to 2 standard deviations, right? Well, the 1.5 puts us right in the middle of this fair value gap, which is into the discount of the sell side dealing range. Okay. It's also back below the 50% of the 4-hour. So it goes into the discount of the 4-hour, discount of the daily, into this fair value gap, and then bounces. We do have a fair value gap here at the 2 standard deviations. So that is completely possible as well on the 15 minute. Okay. I tend to look at the 4-hour fair value gaps for those areas first. But if we do have a 15-minute level at a standard deviation that could be considered a pullback, then I will also keep it in mind, depending on what we do at the 1.5. Okay. Because the 1.5, we have all of this sell side liquidity right here. It also puts us in discount on the 4-hour and the daily. It breaks both 5-0s. So we can sweep all of these equal lows, take this swing, get into this 4-hour, and then push back up. I think this is more likely. But we will see. And the 3 deviation actually has us rebalance this fair value gap to then move back up. Now, with that one, would be right about, let's put a premium discount up between the daily 0.5 and the daily 2.5. Yeah, it would still have us in, it would have us in the premium side of the first discount quadrant. Okay. So, still possible. I'm just, my brain says this one. Because we're already in premium. We're going to be dipping below the 4-hour 50% mark of our expected move up to here, or up to here, which is where we're looking for it to go. And we'll be dipping into the 50% of the daily sell side. Okay. So we're back into premium on the daily and the 4-hour levels. Take a quick dip down into discount. Leave these relative equal highs up here for later use when we come back up and grab those. Okay. So that's what I'm looking at. I do think we're going to pull back some here. We're just going to have to see how far. And again, I just, under all of these lows is this 4-hour that I'm getting really, really interested in. Now, what could stop us from that? Because we have already dipped back into the 4-hour discount range. We have not dipped back into the daily since we've gone above it. Is on the 4-hour at this fair value gap. This is going to be our make it or break it moment when we get down to that area, because we have this order block that was created. So which candle is that? This one. And the midline of that order block is right at the midline of this fair value gap. Okay. So that is what I am concerned with. If we hit that and we bounce, I definitely might take a long there. We will have an inverted fair value gap here to deal with, and we'll have to see what happens, because maybe we hit that, bounce up to the inverted midline, and then roll over to come down and take this one to go further up. All possible. Okay. All we want to do is look for the best places for a long. Now, and this is the first 4-hour fair, 4-hour fair value gap below discount. The other thing that I am looking at is that this is our measuring gap. measuring gaps should never be rebalanced. Okay. This has to hold for us to go hit our target at 4 standard deviations on the daily chart. Okay. So this has to hold. If it doesn't, I am wrong on my overall idea of coming up to here on the daily chart before rolling over. Okay. So we're going to have to see. But we're getting to that area. Okay. We're definitely going to get there probably Sunday night. If not, if we just consolidate, then New York's going to hit this area and we're going to see what happens. Okay. So I'll be watching that on the 15-minute chart. Okay. I'm kind of hoping we go back up, take the high, then come down, sweep the lows, and then go back up. That would give us a new 15-minute dealing range, initial dealing range that we could measure to see if we're actually going up to where I want to go up here. All right. So that is the way I mark everything up and the way I look at it, using both sides of the curve, seeing where my confluences are on the 4-hour, and then waiting for the 15-minute to get there and see what happens with it. Okay. How long was this video? It's probably longer than I wanted it to be. 30 minutes. It's not bad. All right. So hopefully that made sense. Some of it made sense. Maybe a piece or two of it made sense. Maybe the whole thing made sense. I don't know. It makes sense to me. The more you do it, the more sense it makes. And I mean, there is a lot that goes into market maker models and dealing range theory. Okay. But I feel like I'm getting a much, much, much better grasp on it. And for someone who has always liked their charts to be as simple as possible, I no longer feel that way. Because I am not at the point yet where I can, with consistency, call where the market's going to go before it gets there. But I am getting to the point where when I put all of this together, I am finding my higher probability trades and skipping the lower probability trades. And that is huge. So, anyway, that is it. That is it for that. I'll go ahead and get this posted because I'm going to bed in about an hour. So I'd like to get a little TV in. And I hope everybody had a great weekend. The market's going to be open in about 10 minutes. But I am not going to worry about it. I'll wait and see what the overnight does. And then see if I can catch a trade from there. So I'll see everybody tomorrow morning. I've got plenty of time on my load, so I will definitely be pulling over at the open and being online to trade. And I think I'm going to grab a 50K Tradeify growth evaluation. Since they are $90 all in, I'll probably pick up a few of those instead of the top step ones. I've got 3 of the top steps on their 25% discount, but for $90 all in, because I still would have to pay the activation fee on top step, I'm kind of leaning more towards Tradeify at the moment. So yeah, yeah. I'm going to grab at least one and start trading some evals. I think, I was going to do another week of paper trading, but I'd rather just go ahead and get into some evals. I think I've got a pretty good grasp on this. Um, and I'm okay risking the $90 to see if I can stay consistent over the next week with profits. So, all right. I want to stop it here before I go into another rant, make this an hour long video. I'll see everybody Monday morning.